touch base with the management of Thermax. Mr. M.S. Unnikrishnan, who's MD and CEO of the business, joins in for a better understanding of their numbers. Mr. Unnikrishnan, it's great to have you on the show. Thanks very much for taking out the time. Good morning. Has the revenue growth been underpinned by healthier order inflows on a week base?
Well, I would say that weak base of the last year certainly has helped for the very high percentage reported by us, so I will admit that way. But a 38% growth in the overall revenue for multiple businesses put together can't be any specific order. It's an execution improvement overall across the board in various businesses of Thermax, including the domestic and international operation, that has helped us to notch up a very healthy, I would say that the revenue recognition. And certainly the profits have been kept pace with the same percentage, minorly lagging, some of which are one-time effect and some of which are certainly a challenge that we are still continuing to be facing on the input cost pressure, which may ease out a little later, because last year itself was a predominant increase in the input cost in steel, copper, nickel all put together, which are seemingly stable at this point of time. However, as you mentioned about the order intake, it's at a muted level. At the group level, we are at 1,340 plus versus 1,397, minor reduction of 4%. Is it a concerning number? No, not at this point of time, because we have an all-time high order book, or the carry forward orders of in excess of 6,400, which we never have seen in the last maybe few years. So there is a reserve available, almost a visibility close to 1 year and maybe a quarter plus is already available for us. But going forward, how the market is going to be behaving, both in the domestic and international markets related to medium and large projects should be looked into separately. We have a healthy inquiry pipeline, but conversions were not as good as it happened for the, if I have to leave the current quarter away, the quarters prior to that, 2 or 3 of them, there were an improvement in terms of the order conversion rate, which I am hoping at least selectively should happen in some of the markets. That's overall take on the results. A good one. Yeah, we are looking forward to better days ahead.
Okay. Have you seen improvement in orders available for execution, and will this then drive energy and environment segment revenues as well for you going forward?
I don't have any major issues going forward for executing the orders already on hand. Barring very few of them, most of them are fairly well backed up with the funding and financing of our customers. I may face some minor headwinds which are not really going to be impacting Thermax, equivalent of the difficulties faced by the small banks, medium-sized banks who normally lend to smaller customers of mine, MSME sector. There is a credit non-availability for the smaller customers today, and we are very calibrated in producing based on their orders, unless we have a guarantee that they'll be able to take the finished good once we are ready with that. But for the medium and larger size projects under execution, the payment guarantees, I have not faced anything so far, because we are very diligent in accepting contracts from companies looking at their ability to be generating the credit, because we do understand the NPA problem prevailing in some of the areas, and we don't touch certain orders, though it may boost our top line and maybe bottom line, but the cash flow can be in difficulty. With a 38% improvement in the top line, I'm very happy to say that my accounts receivables haven't gone in proportion. It is almost stable at the same level. So our cash flows are managed better.
Okay, what is the outlook for the growth in the chemical segment as the resins facility is ramping up? Why are you seeing muted revenues right now? Will that change?
There will be a revenue growth at the year end, certainly for the resin business, as our new facilities moving forward. We are currently at almost a 60% capacity utilization of the chemical factory. Orders are coming in. We are taking more orders. I am expecting by the closure of the current financial year, we should be at a fairly high, upwards of 85-90% capacity utilization, which is for a batch process chemical plant, it will be a fairly high number. So it is quite a good positive number. I also need to be bringing to the attention that last year for same quarter, chemical had a chunky profitable order, which is not there in the current quarter, but chemical is going to be doing better in the second half of the current year.
Okay. How is it that you've dealt with competitive intensity and commodity price pressures as well? And would that eventually end up hurting your margins?
See, in the global markets, there are some threats of a different nature. Though we have been able to overcome the competition from Chinese and even maybe the renewed European competition with their currency having depreciated in the last maybe 18-20 months, we have been able to manage it. But the current, the trade war initiated will force the Chinese manufacturers to divert their attention to the areas where they otherwise were not concentrating in the recent past, and tacit support will come to them from the Chinese government indirectly, directly, whichever fashion, to retain the jobs in China. So this can only be countered with, thankfully, the rupee having depreciated by almost 13% in the last maybe 6-month period. So we have part of this being taken care by the nature itself, or maybe the global economy. So I don't expect any major hurt going to happen even with that threat coming in. But one has got to be alert to ensure that we are present. So we are increasing our the ground level footprints a lot more in Southeast Asia, Africa, and even South America. Very happy to say that last quarter we have been able to pick the largest ever biomass fired boiler on a grate in the world from Colombia. So we are increasing our footprint, knowing fully well that we are going to be present in the markets to ensure that we have the competition taken head on. So that is only worry, if at all one were to have, but one has to face it. In such a kind of a place, can you maintain and increase the margins? Currently, we are looking forward to maintaining the margin with a larger base going forward rather than improving at this juncture, because that may then restrict you from taking order, because we are not moved into the realm of a seller's market at this point of time. It is still a global buyer's market, and the purchaser has got a good choice available, and we have to be on our toes to ensure that we are able to get orders and execute and make money.
All right, Mr. Unnikrishnan, thanks very much for taking out the time to speak with us and give us more details about your numbers. Wish you the very best, like I said.